What's up, Mavericks? If you use Brex, or if you've ever compared spend platforms like Brex, Ramp, or similar tools, you've probably seen the headlines. Brex is being acquired by Capital One, and whenever a big fintech gets absorbed by a major bank, it raises some questions. What actually changes? What stays the same? And how should businesses think about something like this without overreacting or brushing it off completely? This video isn't about stirring up drama or telling anyone to jump ship overnight. It's about context, what happened, why it matters, and when it makes sense to step back and take another look at a spend platform, whether that's Brex or any other tool your business relies on. So let's start with what actually happened. Brex is being acquired by Capital One in a deal valued at around $5.15 billion. Now, the number stands out because Brex was valued at much higher during the peak of the fintech boom. But this isn't just about the Brex story. It reflects how fintech has evolved as the market matured and companies adjusted their strategies. As interest rates climbed and funding got tighter, the market shifted. Grow at all costs stopped being the goal, and sustainable revenue, risk management, and efficiency started to matter a lot more. From Capital One's side, this acquisition brings a modern spend and expense platform into a massive banking ecosystem. From Brex's side, it brings scale, infrastructure, and long-term backing from a major financial institution, but also the realities of operating inside a large, highly regulated bank environment. Right now, the acquisition doesn't signal failure. It's a change in ownership, and ownership changes tend to shape how products evolve over time. That's why people are paying attention. While the news of this acquisition is big, it's important to be clear about what hasn't changed yet. Brex customers can still use their accounts, cards still work, spend controls, expense tracking, and reporting tools are all still available. There's been no announcement of immediate product removals or forced migrations. This kind of continuity is typical during acquisitions. Platforms don't flip overnight, and customers aren't usually asked to make sudden decisions. For many businesses, Brex may continue to work just fine in the short term. There's no requirement to act quickly just because an acquisition happened. But this is where things can start to shift over time. When a fintech platform becomes part of a large bank, priorities tend to evolve. It's not always dramatic, and it usually shows up gradually behind the scenes. Product direction can shift downward toward broader segments. Risk tolerance can tighten, and new features can take longer to roll out as more compliance checks get involved. And the timing matters. Finance teams are entering a moment where AI can dramatically expand what small teams can handle, and independent fintech platforms are moving quickly to roll out tools that change how finance work actually gets done. In moments like this, how a platform is built and who controls it matters more than ever. For businesses that chose Brex specifically because it felt startup first, fast moving, and fintech led, those changes are worth paying attention to. This is usually the point where some customers start to take a step back. It's not because anything stopped working, but because the situation around the product is changing. A lot of teams picked Brex because it felt fast and flexible, and because it came from a fintech that could move quickly. When a platform becomes part of a large bank, the way the product evolves can shift over time. That matters more for businesses like teams that are growing, working across borders, or relying heavily on reporting and cash flow controls as they scale. Ownership changes like this matter because they affect how products evolve. Integrating a standalone fintech product into a large banking ecosystem is often a long, sometimes disruptive process. Key talent can shift during transitions, and operating inside a regulated institution usually adds more approval layers. That shift tends to show up in everyday workflows, how fast things move, how much flexibility teams have, and how much effort it takes to get real visibility and control. Brex may continue to work well in the near term, but ownership changes like this often introduce new trade-offs as teams grow and their needs evolve. Acquisitions usually create a natural pause. There are good moments to check whether your spend platform still fits how your business works today and where it's headed next. For teams that are actively comparing options, Ramp takes a different approach. Ramp's focus is on helping businesses save time and money by tightening up spend controls, giving teams real visibility into where money's going, and automating a lot of the manual finance work that slows people down. Because Ramp isn't owned by a bank, it has full control over where the product goes and how it supports customers. That independence shows up directly in the product, from granular spend controls and policy-based approvals to real-time reporting, accounting automation, and AI-driven insights that help teams spot savings and optimize spend as it happens. For teams that want tools to keep improving, policies to stay consistent, and workflows built for modern finance teams, that flexibility definitely matters. Ramp is also making it easier to transition right now with limited time incentives for teams coming from Brex. If a switch is on your radar, it's worth taking a closer look while those are still available. If you want to learn more about Ramp, check out our videos linked in the description, and if you're ready to sign up, just hit the link in our description to get started. The Brex acquisition is a big shift, and while you could wait to see how the dust settles, the smartest move is to use this moment to look ahead. It's the perfect time to ask if your current setup is actually keeping pace with where you're headed. Whether you stay put, reassess, or switch, the key is making sure your tools fit your growth stage and how you want finance to work inside your business. Thanks for watching, Mavericks. I'll see you in the next video.